Sunday, April 27th, 2025. Happy Sunday, everybody. Hope you're having a wonderful weekend. As always, a free way you can support this channel. Hit the like button. And if you like this content and you're not a subscriber, hit the subscribe button as well. But let's go ahead and dive on in. So something really interesting is happening right now, and it's just something to take note of. We'll see how this plays itself out. But funding rates are still negative despite this recent move to the upside. Bitcoin is ready to go higher. So here's what's going on. This rally that we're seeing right now is what's called a disbelief rally in crypto, where a lot of people are just of a mindset, no, this is just a rally that we're going to hit a peak very soon and we're going to short it. And whenever people short, or whenever there's too much of a shorting or longing on one side, the market tends to go in the opposite direction. And so the fact that so many people don't believe in this rally actually makes it likely, a lot more likely, that we're going to go higher. So really fascinating to see. And then by the numbers, you can see here, I mean, every exchange except for crypto.com is negative. It's net negative. And so this rally, you can see, WTF are you guys doing? Maximilian Price, really love his stuff on X here. Hated rally this will be. Only once we clear 100K might they start to calm down. And so, man, who wins in bull markets or bear markets? It's the market makers. And if most people are short, it's probably because most people are wrong about where they think the direction are going to go. And the fact that most people are short right now, that's a great sign for those of us who are holding cryptocurrencies right now. So we'll see how this plays itself out, but that's a pretty promising, very short-term thing. And when I say very short-term, I'm talking about like the shortest term that you could, like we're talking about a week. A week from now, it could be that everyone's long, So let's enjoy the next few days here. Decode, I shared a video from him, I think yesterday, and I'm just really loving his charts. It's charts that he's building himself. Just awesome. Give this guy a follow. I'd even turn on the notifications if you are interested. So here's some information from Decode. Copper/gold ratio falling like a rock is a historical precursor to a parabolic rise in Bitcoin. Okay. M2, lots of things that you could say point to a parabolic rise. I am just interested in a rise. I'm interested in Bitcoin hitting a new all-time high. I think there's going to be a lot of resistance in the 1-teens if it gets there. So we'll see what parabolic means. I would call a move from 74 to the 1-teens a parabolic rise. But anyway, copper-gold ratio falling like a rock is historical precursor to a parabolic rise. So we can see on this chart, copper-gold ratio, copper priced in gold. So copper's going down in its gold valuation at a bottom that leads to a significant run up in the price of Bitcoin. You can see it in 2017. Actually, this bottomed out in 2016 and then peaked in at the end of 2017. And then same deal. We see, when was that? July of 2020, a sharp move up, peaked in April of 2021, and then saw double top around the same time as the Bitcoin peak in November of 2021. And so is this a point where we're going to bottom? Is it a point where we're going to bottom? We'll see. It didn't really play itself out over the last year, but we are at a level of support, some level of support for copper priced in gold. Something that I just would have never considered, and it's just really fascinating to see different charts and what that could mean for the future. So the ratio applied in orange at the top is also enabled in the Decode business cycle oscillator below. You can see this chart for free. Cool stuff he's building. He is, I can't deny it, building really cool charts that offer perspectives that I would never considered. But moving on, short-term holders who have been at a loss for the past 3 months are now actively selling coins, which has halted the growth. So we've been chopping around $94,000, $95,000. I wouldn't be surprised. I'm making this video a little bit earlier than when you're going to watch it, but weekends, ever since Trump's president, it hasn't been the case, but weekends are usually pretty tame. So I'm guessing Bitcoin's around $95,000 on a Sunday morning when you're watching this video. Who knows? If it's much higher, I'd be a little nervous. But anyway, so short-term holders are selling. If you have been paying attention to the spot Bitcoin ETF holdings, they are adding aggressively. They've added almost $3 billion. I think actually exactly about $3 billion worth of Bitcoin to their holdings this week. And so why, if that's the case, the price should be going up much higher, but we're seeing a lot of offloading from short-term holders now that they're finally in profit. So over the past 3 days, demand on exchanges has completely absorbed this sell-off. Keep watching the 96K mark. This is the average entry price for the short-term cohort holding coins for 3 to 6 months. This level is the last resistance zone. We're at the last resistance zone, and then we're off to the races, maybe. We will see. Things are looking quite bullish right now. How about this? $80,000 Ethereum. I don't know who this guy is. Leo Lanza, the Ethereum chart they don't want you to see. $80,000. It looks like a peak in 2027. I feel like making a bet right now, something where it's like, okay, here's what we're going to do. If Ethereum gets to $80,000 at any point in the next 3 years, I will shave all of my body hair. Eyebrows, not my eyelashes, that's important. Top of the head, beard, chest, it'll just be a full shaving of everything. And I guess I won't cry because if Ethereum's at $80,000, I'll probably be set for life. And so maybe I'll just take a few months off of making content when that time comes. Guys, I have an entirely different perspective on Ethereum than Leo Lanza here. This is absurd. Okay, I seriously think that Ethereum might not cross $2,200 if and when Bitcoin gets to a new all-time high. I mean, look at where we are right now. You know, Bitcoin went from 74 to 95 in a couple weeks. And Ethereum's at $1,800, and we're celebrating that now. Ethereum went from 1,400, under 1,400 to 1,800. Cool, but could I see Ethereum get to 2,200 with Bitcoin at a new all-time high? At this point, I honestly could. And then from there, I'm a mega bear on Ethereum, mega bear. Now, eventually, Ethereum might have its day, and who knows with this Pectra update, etc., whatever. But this is just absolutely absurd. There's no reason for you to believe that Ethereum would go to $80,000. Ethereum is fundamentally different from the moment they went from proof of work to proof of stake. So anyway, I just thought that was funny. Let's move on. Ray Dalio. Man, I really respect Ray Dalio. But so I'm going to read some of this. A beautiful rebalancing. I'm going to read some of Ray Dalio's perspective here. And then I'm going to read a counterpoint to it. And, you know, someone makes their case first, they seem right, but then you hear another side. That's from the Bible, Proverbs 18:17, except I butchered that verse. So, okay, I like it. It's a compelling argument, but I end up not being a believer in it. But if you're going to disagree with me or Ray Dalio, I would request that you disagree with me. All right, I was pleased and not surprised that the U.S. and China will be having tariff negotiations, which is that true? China's denying it, which will be negotiations on a much more than trade. In my dreams, I can imagine the U.S. and China working out a beautiful rebalancing, one in which the unsustainable excesses are reduced to levels that are sustainable. So he lays out ways that the United States and China need to do some kind of a reset, and I'm not referring to the Great Reset when I say that, okay? So here's the problem with the United States. Americans and others buy inexpensive manufactured goods from China that are financed by the United States, borrowing from China and others, and in the process, the United States has lost its ability to manufacture effectively, which has contributed to the plight of the bottom 60%. That's true. While it has developed a geopolitically threatening dependence on manufactured goods from China and other countries. At the same time, China and other countries have developed an unhealthy, excessive dependence on the returns of U.S. debt assets and other American capital market assets. This is an unsustainable imbalance that one way or another, i.e. in a coordinated, well-managed way or in a crash, must come to an end. Said differently, as a result of these excesses, the U.S. has become the world's dominant consumer and borrower, thus building foreigners' unhealthy dependencies on selling their goods to the U.S. consumers and on the returns of U.S. bonds and other American investments. And China has become the world's dominant manufacturer and lender, thus building unhealthy dependencies on selling and lending/investing in other markets, and all of these are threatening in a world in which mutual dependencies are threatening, so they must be rectified. Here's what the United States needs to do. They need to cut the deficit, raise manufacturing, good luck with that, cut consumption, Good luck with that. Reduce its debt burden. China needs to cut the surplus, lower manufacturing, raise consumption, and reduce its debt burden. And then the end result is a beautiful rebalancing. That makes it sound like there's problems on both sides. I think a lot of people would argue that there's a bigger problem in the United States than in China. And that's what the rebuttal says. So Market Sniper, awesome account. You've got to give this account a follow. Nothing beautiful, only pain at Ray Dalio, and collapsing living standards for Americans. Given the libertarian inside of me that's raging inside of me, this sentence right here is enough to convince me that I am on Market Sniper's side and not Ray Dalio's side. But let's read this here. Dalio's beautiful rebalancing is a dangerous fantasy because it fails to acknowledge the fundamental rot within the American economic model. Ooh, the libertarian in me. It places the U.S. and China on equal footing as if both nations are equally responsible for the current imbalances. This is a blatant Pax Americano whitewashing of decades of American corporate greed and short-sighted political decisions. Something that Pax Romana, the glory of Rome, right? That's what they were screaming until Rome collapsed. But here we are. Pax Americano. I love that comparison. Dalio suggests the U.S. needs to cut the deficit, raise manufacturing, cut consumption, and reduce its debt burden. As if these are simple policy tweaks. The deficit is a direct result of tax cuts for the wealthy and endless military spending, both of which benefit a select few while burdening the majority. Quote, raising manufacturing is a pipe dream. Yes, without addressing the systemic issues of declining education, lack of worker training, and the relentless pursuit of short-term profits over long-term investment. Quote, cutting consumption ignores the fact that the American economy is built on consumerism fueled by debt in a culture of instant gratification. Oh my goodness. I'm sorry. I did a deep dive of what went wrong in 2008. And everything that this person is saying is, it's just, that's exactly what the problem was with our greed and our short-sightedness in 2008. And I highly doubt that we have learned our lessons. So Dalio's silence on these core issues is deafening. He speaks of cooperation and capable decision-making, but fails to acknowledge the deep-seated corruption and political gridlock that prevent any meaningful reform in the U.S. He presents China as merely a co-conspirator in this economic drama, ignoring the fact that China's rise is in many ways a direct consequence of America's decline. The beautiful rebalancing Dalio envisions is nothing more than a comforting illusion designed to protect the interest of the wealthy elite who have profited handsomely from the current system. Until the U.S. confronts its own internal contradictions and addresses the deep-seated inequalities that plague its society, any talk of a balanced and sustainable global economy is nothing more than empty rhetoric. The trade imbalance with China is a symptom, not the disease. And Dalio's prescription treats only the symptom while ignoring the underlying illness. Conclusion, amen to this. Short America, long gold. If you have not been watching my channel for a while, I am telling you, what's next is a significant outperformance of the stock market by gold for the next 10 to 15 years. And we are at the early stages. I know it sounds like a lot of people are talking about gold and gold's really hot. And yes, it is, but we ain't seen nothing yet. And could you imagine for a second the consequences of a world where gold is worth $10,000 a month? Let me tell you this. That means a lot of other things, $10,000 a month, $10,000 an ounce. That means a lot of other things are much more expensive. Reminder, okay, I've said this before. A gallon of gasoline in 1998 when I got my driver's license was under $1. A gallon of gasoline when I got married in 2008 was over $4. Where do we go from here with a gallon of gasoline? It may be that we're going to double-digit dollars in the United States, which is just, for those in other countries, that doesn't sound that bad. In the United States, that's just off the charts insane. That may be what's coming next. So are you ready for that? Short America, long gold. I am a believer in that. Another thing that has me just, people are seeing it. People are seeing the writing on the wall. So Bridgewater, largest hedge fund in the world, in their extremely influential newsletter, quote, we have been through many big economic shifts over Bridgewater's 50-year history, so we don't speak lightly when we say that this looks like a once-in-a-generation one, adding that they see exceptional risks to U.S. assets. So that's what we're seeing on this page. And then let me look at the next image here. There's a few causes with this shift, and there's some that I'm like, I'm not entirely on board with that. In particular, let me read this part here where my mouse is. The rapid shift in modern mercantilism presents imminent risks across each of these three dimensions, which have begun to materialize. We expect a policy-induced slowdown with rising probability of a recession. My argument, I've been saying this since 2022. Oh, interesting. I'm seeing a comment from Jordan Lindsay here. Maybe I shouldn't even be worried about this at all. But anyway, I'll read that comment from Jordan Lindsay in a second. We expect a policy-induced slowdown with rising probability of a recession. I've been calling for a recession since 2022. Is Trump accelerating that? Yes. Is it inevitable? I do believe that it's inevitable. The Fed is less able to ease proactively into the slowdown as stagflationary risks rise. Other central banks will lead the easing cycle. I agree with that 100%. I've shown you charts of the 10-year yield, the 30-year yield. It's going to be incredibly difficult. It's going to take insane amounts of quantitative easing to bring rates to a point where they've been in the past. I do wonder if a 2.75% 30-year mortgage is just gone forever. We'll see. U.S. corporates are under threat while strong earnings remain priced in. Okay. We see exceptional risk to U.S. assets which are dependent on foreign inflows. Okay. And then Jordan Lindsay, same guy said to buy China in 2021. All right. The United States has certainly outperformed China, at least in the stock market. So there we go. I wish I had seen that before. Oh, I did not mean to click on that. Let's just move on. All right. Here's a chart that I would say is providing evidence that would disagree with my main thesis as to where we're going next. So I always want to present charts and information that would disagree with what I say, just to leave myself out of this a little bit. So here we go. The S&P 500 is up at least 1.5% for 3 days in a row. That was Tuesday, Wednesday, and Thursday of last week. This isn't stuff you see in bear market rallies or short covering rallies. You see this before times of strong performance. Higher 10 times out of 10 a year later and up 21.6% on average. Okay, so is this time different? We have 1970, March 29th, 1970, within 12 months. Yikes, that lime green is hard for me to see. I think it says 29.8%. 1974, 24%. 1982, 29.9%. 1984, 17.9%, 1987, 9.1, 16.4%, 2002, 8%, 2011, 25.4%, 2016, 21.9%, and what is that? 11/5/2020. There's like a space between, I guess it's 11/5/2020. 33.8%. So, is this time different? Yes. That's my answer. But you know what? That's a lot of information that would make an argument that this time's not different. Take from that what you will. Bitcoin ETF flows. I meant to share this earlier, but you can see lots and lots of Bitcoin being bought over the last week. Let me get to the final thing. I'm being kind of facetious. Okay, Crypto Beast. If you bought gold at the top exactly 533 years ago, you would be at break even right now. So congratulations to you. Diamond hands, we're talking diamond hands. Okay. If you bought at the top in 1492, 1492, you have finally broken even, and now you can sell, right? Now you're going to sell. Now this is prices adjust for inflation. And so, of course, dollars did not exist 533 years ago. I'm seeing a quote from Da Vinci Jeremy here. Hey there, just wanted to point out the United States wasn't around 533 years ago. This is actually Da Vinci Jeremy. That's funny. So any calculations you make using current values won't accurately reflect the dollar value to gold back then. Keep in mind that today we operate in a global market, whereas prices were more localized in the past. That seems, Da Vinci, I love you, man. I watched your first video. I watched your videos before even Bitcoin existed. Come on. You didn't. I wonder if Da Vinci, this wouldn't surprise me. There's certain people, when I make a joke during my live streams, or if I just make a joke video, they just cannot process joking unless I say the words, I'm joking. Maybe Da Vinci's one of those people. I wouldn't be surprised. But anyway, congrats to those of you gold holders who are finally in profit. All right. Anyway, that's all I have for today. I hope you have a wonderful day, a wonderful rest of your weekend, and I will most certainly be seeing you in another video. Peace.